Hey traders, let's take a moment to thank and feature one of our top sponsors, FX2 Funding. If you're looking to get funded, listen up. FX2 is offering traders the chance to trade with up to $200,000 in simulated capital and receive up to 85% of their results. If you're interested in getting started, use the link being dropped in the chat or the link down in the description below. If you pass the evaluation, you'll receive your feedback and gain access to your new account. FX2 allows traders access to a wide range of assets and allows traders to hold their trades over the weekend. FX2 is giving A1 Trading Show fans 15% off the evaluation fee if you use promo code A1Trading15. So if you'd like to learn more, again, use the link being dropped in the chat or the link down in the description below and use code A1Trading15 at checkout for a discount on any of their evaluations. Now back to the show.
Everybody, welcome back to another live stream. Glad to have you here with me, and another exciting day. Actually, really exciting day. If you're an indices trader, today is the day that we do some serious analysis on indices. We've got to also talk about gold. I know Frank is short gold, actually, so going out on a limb there. He is making a move that we will be discussing in today's live stream. Let me just ask you guys as we roll in here, 140 of you guys, smash that thumbs up button for me. Do me a favor, do us a solid here on the YouTube channel stream here. If you guys could help us out by smashing the thumbs up button, it really would help. Speaking of you guys, I asked you guys this morning about your thoughts on the NASDAQ and the Dow, and we've got a updated poll here. We did a poll in Telegram this morning. We asked the NASDAQ and the Dow, are you guys bullish or are you guys bearish? And we did get the numbers. The numbers are in. We've got 306 votes, and what you can see here is that 73% of you guys kind of agree with me, which I've made my point pretty clear. I am bullish. I even said I have a NASDAQ trade open, which we'll discuss here in a few moments. Guys, we asked 73% of you guys answered bullish. 27% of you guys said bearish, basically thinking the majority here think that stocks are moving higher, indices are going to move higher, and of course that has heavy implications on what we could see across the board for gold, the dollar, currency crosses, etc. So if you guys would like to participate in future polls, by the way, join our free Telegram channel. We share analysis each day. You know, you can see I put up charts, and Frank is in here as well. It's Frank and I's room, so you can join us. It's hosted by Frank and I, our lovely channel here. If you guys would like access to this, we're going to drop a link in the chat. Send us a direct message, ask for the link. Let us know that you'd like to join the Telegram channel. It is free to do so. All you got to do is shoot us a message, click this link right here, and ask to join. Again, it's daily analysis, trade setups from Frank and I, as well as, of course, you can get in on the daily polls. And of course, you'll be featured on these streams here as we do those each day. We're trying to do them each day. Anyways, I mentioned I am currently long NASDAQ. I'll show you guys my position here. Here is the NASDAQ long that I'm in off of this support level. So let me show you guys where I'm at. Longer term, I like this area. We are coming into a really key day for indices traders out there, guys, because again, today we have Microsoft and Google reporting earnings after the bell. This is a massive day for stocks and indices. If you're trading the Dow, if you're trading the NASDAQ like myself, or if you're trading the S&P 500, all of them are set to move pretty aggressively here today as we have earnings after hours. Now, again, those earnings will set precipice for more than just stocks and indices. That will have huge impact on the dollar. It'll have impact on gold. Everything will move in response to these earnings because it will show a lead indicator in some ways on how the U.S. consumer is holding up, how the U.S. economy is holding up, etc. Anyways, full disclosure, like I said, I am long, and I'm not sure where my stop order went. I'm supposed to have a stop loss on this. I think my order got canceled somehow. Let me just add my stop order before I forget to do that, because the last thing we want to do here is mess that up, right? Anybody else ever made that mistake of forgetting to put a stop on their trade? I actually did have a stop. I think my order just was, you can have on stock brokerage, you can have good till canceled orders, or you can have end of day orders. I think I put an end of day order. So I just need to update that really quick. Let me just see, where did I have that stop? I had it at 349.80. So let's do 349.80. And this is going to be, of course, a stop loss of 600 units. I have 600 shares of QQQ, which is just the NASDAQ. And this is, of course, a sell stop to get me out of the trade. And this is what I'm saying. Instead of day, I needed to do good till canceled. So my stop loss is now in play. There we go. Boom, done and done. NASDAQ still long. Like I said, we're floating $2,000 on this trade. Let's see. But, to be completely honest with you guys, I think the NASDAQ has room to run higher here. And if I'm wrong about that, I will stop out. And if I'm right about this, my goal is to see this thing make moves higher. I think, first stop for us guys, if you're a NASDAQ trader like myself, we've got to see a move back up to this trend line here, right? The white line represents this downward trend that we've seen on the daily chart. And you might say, Nick, why are you buying in a downward trend? It's because the longer term uptrend, I still think is intact despite this level. This level has been aggressively held multiple times at August lows, September lows, and back even in June and July. I'm sorry, mostly just June. We saw a huge breakout from this point. So I am, like I said, I'm confident in this area as we go into earnings. And if I need to be stopped out, I will be stopped out with a breakout underneath these lows. Okay. So that's my game plan. I'm trying to just stay transparent about the NASDAQ. Last thing I will say, I think Frank is also long NASDAQ. We are both long NASDAQ. He's got a gold short, which we'll bring him in a moment to talk a little bit about that. Like I said, full transparency, I have been wrong about the NASDAQ. I've been early to this trade. And when it comes to trading, let's be very clear about something. If you're early, you're wrong, right? If you're trading and you're early, you're wrong. That's why we use stop losses, right? So I was early, so I was wrong on my previous attempts to get long. However, I like this entry. I think we have a good shot at moving higher here. And my risk reward to me seems pretty reasonable if we do get a little bit of speed picking up on this, if we get some momentum off of perhaps earnings. And another big one to watch in terms of what could move this is yields, right? I'd like to see yields continue to come off those highs. We saw the 10-year big drop yesterday. We're sitting at support. Someone sent me a message on Discord this morning saying, Nick, we're at support on the yields. Be careful. And I agree, right? If yields shoot back up again, it could mean downside for stocks, for indices especially, right? But I like the risk reward here. I think this thing is overdone. I think it's probably time to see a little bit of rollover. Speaking of which, I don't have a position, but I'm pondering the idea of getting long TLT. This is, of course, a bond ETF, the 20-year Treasury bond ETF. If this does continue to see a little bit of upward momentum, what that likely means is dollar weakness. Again, like I said, I say that cautiously because the dollar is still in a strong upward trend, and we got to be careful about that. I want to show you guys here some stuff on the Smart Money Tracker. I mentioned this yesterday, but in case you missed it, the Smart Money Tracker has us seeing some interesting moves right now. The US dollar is still bullish, but the bond market is incredibly short biased, right? The 10-year bond is incredibly crowded on the short side. And that's from institutional money. They've been short on bonds for a long time. And that's been a very, very profitable trade. If you had followed Smart Money on this and shorted bonds, when they started shorting bonds, which was a long time ago, by the way, you would have made a major amount of money off of this because bonds have just crashed even more so than stocks did. If you had shorted bonds, it would have been the trade of the century for the bond market. Just that is no question, right? It's the biggest drop in bonds that we've seen, I think, ever. At the very least, multi-decade, record for bond market crashing. Anyways, there's a lot here to unpack. We've also got the Japanese yen still very bearish. If you're watching yen crosses for my currency traders in the building, let's talk briefly about this. If you're someone who's trading dollar yen, you got to be asking yourself, as we near that 150 mark yet again, which the Bank of Japan has made, pretty abundantly clear with their interventions that they don't like the currency exchange rate up in this area. I'm very cautious. I've made this point before and I will make it again. This is really why I haven't been covering dollar yen very much. Here's simply put why. We're at a resistance point. Price needs to make a decision. If the Bank of Japan cannot hold this zone and we break out higher, absolutely a bullish trade, in my opinion. This would likely lead to yields soaring higher in the US. And if that's a trade you want to take, then again, I think from a technical perspective, we need to see the breakout through these highs at the 150 mark. Now, if you're a bear, let's get clear about this as well. The Bank of Japan intervening in this area is clearly, they don't want the currency exchange rate between the dollar and the yen to stay at these levels. They want it to back off. They want it to retreat. So if they're successful in their, threats of buying their own bonds to strengthen their currency, you may see the dollar yen fall. But I don't have a prediction on what's going to happen there. I am being reactive. So dollar yen, if we break out higher, then perhaps we see a bullish opportunity on that retest. If we fail here, if we start breaking structure, if you're a dollar bear, keep a close eye on that dollar yen. So again, I don't have a strong bias here, but we're at a very pivotal point, a decision level, if you will, for the dollar Japanese yen cross. So yeah, really, really important on how we trade from here on that. Anyways, bond trading sucks. Old timer says H ball out. Yeah, it's a really boring, slow market to trade, and I definitely can agree on the most part. I very rarely will trade bonds because usually I'm trading currencies if I'm going to trade something related to the bond market. They of course are very, very similar. You just get leverage in the currency market. That's why all the retail traders love currency trading, because you get so much leverage with all those brokerages. Anyways, we've got to talk about gold here. And to talk about gold, we're going to go to Frank in just a moment, who has a trade on. Remember, we made this point, guys, yesterday. We highlighted our highs and lows here about gold. And I mentioned that, same thing with the dollar yen. We're at decision points here at 1980. We seem to be coming down, and we seem to be breaking through that previous day low. So to join me on this call, we're going to have Frank in just a moment. Before we bring Frank in, we're just going to thank our sponsors here that make this show possible. And then we'll come right back to Frank after this.
Attention A1 Trading Show fans. If you're interested in getting free access to the EDGEFINDER or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
What's going on? Welcome back to the show.
Hey, how's it going?
It's going. And Frank, we've got two trades to talk about. One we share, the other is new for you. Let's go to gold first. So gold, I mentioned this yesterday. I pointed out that on the daily chart, we had this resistance point, price coming down, trying to break through these yesterday's kind of low. Nice start to the day, a little bit of a bearish push here. And you took a short trade inside of VIP. Is that right?
Yes, I got in pretty much where price is at now, 1963 something. And I mean, overnight we saw a good dip, but then there was some recovery in that market. But I still have this lingering bias that I've been looking to take more short trades on this metal, just because, this excessive run to the upside and then this catch on like a triple top, if you want to call it that. It has multiple tops here where it just could not break above. And yeah, the fact that we're on day 3 and price is still, struggling to break that kind of shows that there's a little bit of an exhaustion in there. So what I'm looking for is a test lower towards like the 1940s or 30s level, which is kind of around this little past top we've seen. So just looking at a pullback here, and honestly, hopefully all the way back to the downside. But what's really going to impact gold and the NAS trades that we're in are PMI that's coming out in like a minute or something.
Yeah, I was just going to say, Frank, if we can take a quick pause and come right back to you. We've got in just about 30 seconds, the numbers coming out. Guys, I've got the euro in the bottom left. We've got the gold chart in the top left. We've got the, let's put the NASDAQ just to see how things are impacted here on top right. And then, of course, the dollar index bottom right. Guys,
we need lower numbers.
Yeah.
That's what we're looking for. But, you know, we don't know what's going to happen initially. Like it's going to swing one way really hard regardless. So,
yep. And here comes the news. The gold market initially pushing lower, dollar index higher. That maybe suggests a little bit of heat in the PMI numbers. Let's see what we got. Again, forecasts were 49.5 on manufacturing and services. We got 50, Frank. This is showing yet again.
Another beat.
Another beat. A 50.9 for services. That is yet again another beat. Strength for the US dollar makes sense here, and good for your gold trade, Frank. That's got to be nice right now as this trade's lower based on again a strong economic output. And I'm going to say something about the NASDAQ. I could be completely wrong about this, but I am still in the camp that a strong US economy is not necessarily bad for stocks. Now, some people might argue, well, that means the Fed's going to stay higher for longer. But I'm kind of in the camp. I don't think the Fed makes too much of a bigger move. So I'm not too threatened by this push down on the NASDAQ. And I think, dollar strength here does make sense. What do you take out of that?
No, I think you're right. We want to see a stronger economy. The only problem with that was, higher number of jobs added, better output from GDP, more purchasing managers, kind of involves that inflation aspect.
Yep.
But what we've seen is, stubborn inflation over a long-term trend downwards. Like we were like double-digit inflation. Now we're, down below 4%. I think I don't know the exact number, but we're pretty low now. And seeing that sort of a stability in inflation levels means, the path isn't over for rate hikes, but, it's not too detrimental to inflation. We're not seeing large increases in CPI numbers overall. So,
Right.
I think it's more so a negative impact on gold just because it's trading directly against the dollar, whereas, the NASDAQ has earnings and so many other factors that's coming into play here. So
no, that's a very, very good point. And I think, guys in the audience, what Frank just said is really important, because if you are taking a look at the dollar trade, many traders get confused. Dollar up, why isn't stock market down? It's not quite as, each market has its own personality. Gold can spike heavily on global tensions and fear, right? But stocks, if you're going to just look at the dollar versus stocks relationship, well, stocks have earnings. They have, the U.S. economy and how resilient or not resilient it is. So it has other factors, right? The dollar is, of course, a player in the game, but it's not the entire thing. So anyways, to add to our conversation here, Frank, we're going to be bringing in Tom for a little bit of a technical look at the charts here today. We'll say hello to Tom from Simply Forex.
Hey, Tom.
Morning, guys. How are you?
Good. And Tom, like I mentioned, we're seeing some PMI numbers causing some movements in the charts here this morning. What are you watching here today, Tom?
Well, I was looking at euro US dollar for a buy trade, because just on the day chart we had such a nice, break of structure. It's been at this weekly level here that it just couldn't break. And then slowly, price and structure has become an uptrend. We're getting, higher lows, higher highs, and, before the start of the day, I was expecting a pull back into this gray zone and potentially a move higher. But, as the PMI data for the US was far better than expected, and all of the German and Euro PMI data was terrible. Terrible data. So it's just news has, prevented me from taking this euro US dollar trade. I really like this level in here. So yeah, I was looking at euro US dollar before the start of the day. Silver. I know Frank was looking at gold, and I was looking at silver. I always feel like doing a pirate impression when I say silver for some reason.
Yeah. Tom, what's your thoughts on silver? I have a long position, so don't hurt my feelings if you're short biased.
I've shorted it down to this blue line.
Okay.
Yeah, so it was just so overbought, and price was in a downtrend, and still, for me, still technically in a downtrend as well. But if you have a move like this, there's no way I'm going to try and sell it back down to the lows. It's just, there's too much buying pressure up here. Sure. So it was just a bit of a, in and out trade, really. We were getting this nice reaction off of this grey zone here, these last highs. And it was just a move down to this last piece of support, where I do think the market is going to find some support and potentially do this. So, just goes to show, Nick, both people can be right. You can take a short trade down to an area of support. And then, from this area here, I really think there's going to be a lot of buyers sitting in here to push it, back to at least these levels, if not further.
Sure.
Yeah.
Tom, so in terms of, we talked gold, now we've talked silver, so we've got a good bit of metals coverage. What do you think about some of the, actually, I wanted to come back to your thoughts on the Euro USD and the Pound USD. Okay. You made mention to something that we hadn't talked about yet on the stream today. PMI numbers out of Europe were pretty disappointing. You had the German flash services PMI came out less than expected. Manufacturing was better than expected. Services out of the French numbers, and then service out of PMI. Anyways, the numbers were not super impressive. We also saw a claim account change tick up higher out of the UK. So a little bit of tough news out of Europe. And so I guess these charts are moving. You've got Euro USD and you've got Pound USD, both selling off here pretty hard. A little bit of tough for me to look at because, of course, I shorted the euro and I was early to this idea. But as we've said earlier on the show here today, early means wrong, right? Because of course, if you've got a stop loss and you're early, that means you were wrong. So I don't have a trade on the euro. Fortunately, my NAS trade is going pretty well, but we will see. But I want to ask Frank and Tom, both of you guys. We'll go to Frank first. Euro dollar, pound dollar. Do you have any bias there? Any thoughts on these pairs?
Yeah, initially I was thinking of buying euro dollar. That was yesterday. I saw the EDGEFINDER score went from a very strong bearish reading to a bullish reading, or a weak bearish reading, my bad. So I was looking at a potential score flip in the system, but after, today's PMI numbers, that's going to change the score a bit too. So we could probably see more of a bearish score on euro dollar. But what I do like is I'm feeling euro longs here. And I like euro yen, seeing that weakness here on that the daily chart. I'm looking for potential retest on that trend line. But against the dollar, I don't think I want to go long on that anymore. It looks like it wants to come down and test those lows again. Let me pull up the chart. So I saw this breakthrough on the daily time frame. It broke this high. I was looking at, okay, so maybe we're gonna start to see a reversal, but today's news was pretty impactful, so maybe another leg lower. So kind of short bias euro dollar.
Okay, fair enough. And Tom, what do you think? I mean, pound dollar, euro dollar, if you had to take a trade, as you like to say, gun to your head, if you had to take the trade, what are you looking at, and which direction?
Yeah, so if if I'm looking at euro US dollar and pound US dollar, and I'm a little bit undecided, which I'm not, I prefer euro US dollar, because first and foremost, if we just go to pound US dollar, and we look at the weekly chart, yeah, I mean, just look at those candles. Just by looking at those alone, yeah, there's so much confusion there. Our buyers back into the market, our sellers, and we have those two candles, buyers and sellers, and then we just got a complete doji, a complete I don't know what's going to happen, and that's what those candles are telling me with pound US dollar. Whereas with euro US dollar, if we go to the weekly chart, there was more of a, well, firstly, it's more of an important weekly level. Yeah, and we got more of a full-bodied bullish candle bounce off of this level. Okay,
Sure.
and the day break that I spoke about earlier, and I would have bought this today if all this news didn't go against it, and literally every bit of news has gone against it. I would have happily bought back in this grey zone and looked to gone higher. And another thing, if we are comparing euro US dollar, pound US dollar, I will always take a look at euro against the pound. And for me, this is a buy trade. So that suggests, go for euro US dollar as well. It just supports my argument in terms of which trade to take. And on the weekly chart, we could see we was in this range for some time, but now it's building up and it's broken out of this range. Yeah, we're starting to see higher lows, and we've had a break of these highs in here. Only just, but a break nonetheless. And then if we go to the day chart, it's just a case of, tomorrow might be the day I get into this pair, because again, if I look at structure, we've broken to an uptrend, and I didn't like these candles. I was expecting on the back of these candles for price to come lower, which it has. And if today's candle finishes like this with a lot of buying momentum, off this level here, then tomorrow I'll be looking at euro pound to potentially buy this. So, euro US dollar, it's a euro US dollar buy, and euro pound, I'm also looking to buy that as well. So yeah, that's what I'm seeing on those two.
Okay, fair enough. And guys, as I show you this chart real quick, we can see we have a guest appearance on the stream. It's Bitcoin. What the heck is going on with Bitcoin?
Yeah.
Bitcoin is up to 34,400, which is wild to see. And this is very characteristic of Bitcoin. When it makes its moves, it does not pull back. It does not wait. It just breaks out and it says, see you later. As far as I know, it does look like the SEC's attempts to stop the Bitcoin ETF from becoming a thing have been pretty futile, meaning they've tried to stop it. They've had court hearings and things like that, and they've just I believe that the latest news out of it, again, not a market that I follow incredibly closely, but they had a chance to appeal and to come back into conversation about stopping this Bitcoin ETF. I think it's the Grayscale ETF or something like that. Anyways, they declined to appeal. And so Bitcoin is off to the races. We broke out into the 30,000 mark. We've been pegged lower each time we come up into this 31,500 level. And here we are today, 34,400. Frank, what do you think? Do you think Bitcoin keeps going? Are you even, my hesitation is like, stocks have been so questionable this year. Why is this risk essentially and arguably a risk on asset? Why is it doing so well right now?
I just know it was from those, the SEC troubles with them trying to, punch holes in the crypto market and tighten regulation. But I'm holding Ethereum and, a couple other cryptos, but I've been holding small positions of them for forever, since like 2020. So I'm just in these ups and downs, just I don't really have a particular bias in the short term, but I think crypto overall, like long-term scale, we'll see
Sure.
those bull
And
markets.
arguably a pretty strong breakout here, right, Frank? I mean, that's you could draw a nice little longer term downward trend line on that daily chart, and you've got the breakout there kind of happening. And even if you do a horizontal level of resistance at that 1700 market, by all accounts, seems to be a chart that wants to go. It'll be interesting to see how that plays out. I also like to tell the story. I'm going to come to you in a second, Tom, just to see your thoughts on crypto. I like to tell this real quick story about years ago when Dogecoin was a big thing. This guy above me, Frank, was long Dogecoin like way before anything happened. And I think I don't want to butcher the story. We put out a video when it was happening because it was so wild. I think he put in like a really small amount of money and it turned into like, was it like 100 to like 1800 or something crazy, Frank? What
Yeah,
was
it
the,
was ridiculous. It ended up being about like $180
yeah,
before the 2020 spike into the new year. And I had the what do you call it? I had the diamond hands.
you had diamond
So
hands, that's for sure.
so I held on for way too long. I saw I can't tell you the percent because it was a lot. It was like I don't know the math in my head, but it was $180, went up to 10K, and then eventually, it started showing signs of weakness after Elon Musk went on SNL,
I
and
remember that.
I was just like, okay, well, after that, price just did nothing but tank. So at some point along the way, I was like, I'm just gonna call it quits here. So I didn't realize the full potential of profits because of my diamond hands. But
Well, it's a good lesson, Frank. And I think also just to add, this is 2021 in a nutshell, guys. I don't know if all of you were, probably most of you guys were not trading during this time, but 2020 and 21 were it was almost like if you could, anything you could buy with a ticker on it would go up like crazy. It was the
exactly.
easiest. Everything was like hot knife on a butter to trade. It was so easy. And then we got hit with 2022, which put things in perspective. Anyways, Tom, I want to ask your thoughts just as we kind of end out here. Bitcoin breaking up into the 34s. Are you a bull? Do you own any? Are you a bear? What do you think?
I, as a rule, I don't trade Bitcoin. It's just so volatile and so susceptible to pieces of news like the SEC or whatever it might be, or Ecuador decide to use it as a currency, or China don't. It's so susceptible, and then you just get a mad buying frenzy or a mad selling frenzy. It's more volatile than the relationship with my ex-girlfriend. So we avoid that. So I don't really trade Bitcoin. I keep an eye on it because a few guys asked me to analyze it and give my opinion on it. But yeah, it's just too susceptible to these things. And you don't really catch wind of these things until they've happened and the moves happened. And then you're just jumping in on Bitcoin. You haven't, got in at a great price. Because if you started buying this now, I mean, there's just no value whatsoever. But it could go up to God knows where.
Right.
So it's such a reactive, it's such a reactive trade all the time. You find yourself jumping in on it. But if I had to find a level, there is a weekly level through here, that may have an impact on this, skyrocketing price at the moment. But yeah, like I say, guys, don't really trade Bitcoin. Keep an eye on it, but yeah, too volatile.
It's one of those markets. I don't really pay too much attention to it also. And like I said, my biggest call into question is we're not in a 2021 environment where everything speculative flies with ease, right? We're in a really hostile environment for risk right now, with yields being where they're at, and global tensions high, and so it's an interesting market to keep an eye on nonetheless. But thanks for giving you guys' takes on that. Tom, I want to thank you for coming on the show. As we close out here, I just want to remind everybody, if you don't already follow Tom on his YouTube channel, he's got a link right here in the chat for you guys. Click that link, subscribe to Simply Forex on YouTube to keep up with Tom. And Tom, thank you very much for coming on to the show.
No problem, guys. Cheers, Nick. Cheers, Frank. See you next week.
Thanks, Tom.
See ya. And same thing to, of course, Frank for coming on the show. He doesn't have his own YouTube channel. This is our shared kind of channel. He's one of our analysts here at A1 Trading. So Frank, thank you for coming on and sharing your inputs. And anyways, go all in on Doge, and we'll see you next time. Just kidding. Don't do it. But anyways, we'll see you next time, Frank.
See ya.
Yeah, crazy story about Frank with Doge. It was one of the craziest things. He was like, oh, I put $180 into it just for fun, and next time I see him a couple weeks later, he's like, oh yeah, it's up to like $8,000, and I was like, what? It was wild. Guys, anyways, I do want to say, if you guys saw us using the Edge Finder, we use this to pick out the smart money tracker. We use this for commitment of traders data. If you guys would like access to this data, here's what you can do. If you want to get more information or check it out or try it out or any of that sort of good stuff, send us a direct message on our website. We've got a link here that's being dropped in the chat right now. If you click this link, it'll take you to a direct message center where you can speak to a real person, not a robot, on my staff about getting access to the Edge Finder if you'd like to try out our software. And also, if you would like to join our free Telegram channel or our free Discord channel, click this link and ask for that. They'll give it to you for free, but you can join in to get trade ideas sent to your phone, to your desktop, whatever. Again, if you do end up joining the paid version, then you get access to the trades that Frank and I are taking, right? So Frank is short on gold. I've got a NAS long that I picked up a few days back. But again, you can get all of the trade alerts being sent by Frank and I. If you want to see our trades in detail, message us and ask for the details about it using that link that's in the chat right now. And again, I hope to see some of you guys in the Discord community. And again, hopefully these streams are helping you out. As always, hit that thumbs up on your way out, and we'll see you back on the next one. Have a great day. See you guys.
And that concludes today's show. Our goal at A1 Trading is to give you the latest market coverage through our daily videos and articles. If you like what you see, make sure to subscribe for more. Be sure to join our Telegram, where we host trading competitions, share free market analysis with trade setups, and have exclusive discounts to our products. Our Telegram is free to join. The link is in the description. See you all next time.